I'm Tim Kotzman. I'm here with Adam Back. Adam, thanks for joining us in the office today.
Yep. Thanks for having me on.
I thought we would start with kind of a fun, lighthearted question that actually comes from Ted at Bitcoin Treasuries Media. He said, Adam, gets all of the serious questions, and he seems like a pretty chill guy. So why not have kind of a fun question to start us off?
All right.
So if Bitcoin were a sport, would it be chess, football, rugby, or something else?
Seems like it's a bit like rugby, maybe.
Yeah. What makes you say that?
Well, I mean, it's anti-fragile. So I like the angry Hulk meme. Yeah, the more you poke at it, criticize it, and attack it, the angrier it gets, the stronger it gets. So it's like basically indestructible. And closest sport to that is rugby.
Yeah,
burly, strong guys charging at each other and plowing each other down, kind of stuff. Yeah, it's kind of like the UK version of American football, roughly. Yeah.
You mentioned last night at PubKey that the "It's so over, we're so back" meme is quite popular these days.
I mean, it's a surprisingly accurate reflection of people's psychology, because you get what, if you go back 5 years ago, a 5% wobble was normal volatility, right? But now, Bitcoin goes from 120 to 110. People are getting depressed, it's over. And then it bounces back to 120 in the space of 3 or 4 days. Like, oh, we're back, I'm so back. And then, wondering, we're getting a new all-time high. So, yeah, it's, I need to think a bit longer term, maybe.
Yeah. If that, without getting into silly price predictions, if you had to be on a side of like Q4 of this year as a blow off top, and then we have years of a bear market versus more of an extended cycle or a grind higher, or like everything's curving up into the right when all the macro guys are putting out great content, I guess, which side would you lean to, or is it more nuanced than that, or different?
Well, if you zoom it out a bit, like a year or two, it is looking a bit grind higher, like, right, at that kind of scale. Kind of fairly steadying up to the right with like a little bit of volatility on top, but not as much as historically. So, yeah, I mean, no telling that there would be an end to bear markets, but it seems like the dips are a bit smaller than in prior cycles, and you've got new types of investors coming in. So I think, the ETFs, so Eric Akormus, ETF expert, said that the ETF buyers are surprisingly sticky. They buy and hold, capable to dip a bit. And so if you the market structure is partly governed by the average makeup of new investors. So if you get a lot of retail investors who will panic sell on a 5% drop, that will help the drop, right? Well, we've lost all the leverage that comes in typically with the derivatives market. So I think the ETF buyers are a good part of the market structure, and the treasury companies are actually very good generally because they buy and hold. They typically market that they're not going to sell. If they do say they would sell, it's really just if they feel that their MNAV is unfairly priced, and they, signal to the market they're going to buy back their own shares, and then, just that information will probably change the price, fix the MNAV. It's in their advantage to buy back their shares in terms of the North Star Bitcoin per share anyway. So if the market doesn't react, they're very happy to buy the shares, right? So I think that kind of buying is incremental. Doesn't affect most companies, very few below 1 MNAV. And as Pierre Rochard's observed, an interesting comment, that the treasury companies are Bitcoin's price shock absorber, because if you get into a bear market, the treasury companies can trade down, but they won't be selling Bitcoin, because they structure up their whole corporate cap table types of debt, types of converts around avoiding that. And I think the bigger ones, of course, have been around longer, have got maybe stronger financial teams to be prudent about that. So I think they are actually just hoovering Bitcoin off the market. That's generally not coming back. So yeah, I think that those inputs, and plus, of course, sovereign wealth funds, pension funds, none of these are day traders. They're not leveraged day traders. And interestingly, they are also, most of the institutional interest is focused on Bitcoin, because for the same reason that, and about a third of the ETF volume is apparently institutional as well, 2/3 retail. Retail, different segment of retail, right? You got the first wave, which people that will buy on a Bitcoin exchange, second wave, people who bought in the ETFs, and third wave, the actual direct, the institutions, whether they buy via a qualified custodian or via an ETF. And so this third wave is, the second and third wave are far less interested in day trading, volatility, speculating on altcoins, because they are typically longer term value investor types of people, particularly the institutions. So I don't think you're going to see the sovereign wealth funds, the pension funds, buying the ever-changing sea of speculative altcoins. And so you see also the Bitcoin market share, the so-called dominance index, actually going up. I think that will continue into this foreseeable future. So I think all of those things are probably more on the side of a grind higher or smaller pull downs side of the story.
Can you walk us through kind of how you've seen the journey of Bitcoin Treasury companies to date? You certainly and obviously had Microstrategy, now Strategy, start this emerging new industry. But it's been very iterative, right? From we'll do converts to maybe don't do converts to preferreds now. But we could talk about digital credit. But what's the solution to some of these pump unlocks that we've seen? And is there a better, smarter, faster, stronger something way to go about these things? Or is it just hey, bite the bullet and turn over the shareholder base? Or just from a macro lens, I guess, however you have think through this journey so far?
Yeah, I mean, I've been an investor personally in treasury companies since relatively early in Microstrategy. So I kind of got, I always think you're going to get to grips with and understand something better if you've got skin in the game and you've got a reason to research, a reason to read the news, a reason to muse about their strategy and their explanations of why they're shifting strategy. And Microstrategy has been quite good for that because they've been very transparent in explaining their thought process as they, and they're really learning as they go, but they're explaining their learning process. So that's pretty instructive. And as you said, they started with corporate bonds. I mean, they started by buying Bitcoin as a treasury asset to stop the melting ice cube, i.e. the super high QE-led inflation during COVID, right? And they were concerned that their 500 million cash reserves that they'd spent decades building up would shrink at 10% a year, which is a huge proportion relative to the speed they could accumulate it by their operating business. Very stable operating business, but not very fast growing, right? So you could see that be a particular concern to them. And I mean, to any business, frankly. And so you could see that Bitcoin was the inflation hedge. And I thought that was interesting enough, but I thought that was, probably most of the audience and myself thought that was the end of the story. Mm-hmm. But as soon as they'd done that, then they start buying more corporate bonds, and then they went on a kind of rampage. Every time people thought they must be tapped out, they did more, right? And they just kept going right into the bear market. Actually got a bit over leveraged. They were sort of their debt levels were above the Bitcoin NAV for 5 months. The first bear market, they're the oldest ones and the first one that's really been through a proper bear market. And they survived because that wasn't a direct lean, right? They had the equity cushion, get super long-term debt. They kept paying the interest rate. They had no problem paying the interest. And so they just rode it out. And I think ultimately that sort of high leverage gave them a false start when it paid off, right, into the next bull market. And then, of course, over time, they progressed to convertible notes at the market selling. And then most recently, the very interesting preferred lineup from it, where at this point they have 5 different variants of preferred, the convertible preferred and different risk profiles of dated preferreds, and the stretch, which is kind of more like targets to be like a money market. So you could sell it in the market at any time and get your capital back, whereas something that has a fixed interest, when the interest regime changes and it's long dated, that could move the price around quite a bit, naturally, right? So I think stretch is designed so that you don't have this kind of long-term bet. And of course, the very interesting thing with the preferreds is they have put a ATM on top of it. So once they get enough volume, they're clearly hoping that they will be able to, not have to go through the bank institutional money raising process, but just sell, create, sell using an authorized partner shares into the market, which would give them very scalable and, low overheads kind of capital raising capability. And so, of course, that takes a bit of time. And I think Soleil has been interested to see more issuers of preferreds. So Metaplanet is talking about it. I think one of the miners might have made a preferred. Do you remember? Not sure which one, but I think there might be another preferred in the market.
Yeah, I know Strive has publicly said that they are interested. Yeah.
Yeah, I think, and then of course, BSTR or B-Star, some people like to call it.
I like B-Star.
Yeah, actually, one of our guys said B-Star. I was like, wow, okay, that was good. Yeah. So with B-Star, we are during the fundraising process with Cantor. Of course, they've done a lot of the instruments for Microstrategy and others, so they have, perhaps the most volume in that sector. We were able to bring a convertible preferred to the market during the outset, whereas MicroStrategy took 4 years or something to get there, right? Because they went through that whole sequence of the bonds, converts, Bitcoin secured debt, ATMs, and then finally the preferred. So we were able to bring a preferred. We bought, of course, a normal equity pipe, 200 million Cantor. The C pipe, so the C is Cantor, right? So it's a kind of in-house SPAC and equity pipe, and then a Bitcoin denominated equity pipe, which brought in 5,021 Bitcoin. The 25,000 Bitcoin that came in the new code. So that's from myself and some early Bitcoin Gs. And then the convertible preferred we mentioned, and some convertible notes as well, and some shoes on top of the convertible notes. So the whole process took 36 days end to end, and so it's very compressed. And it was getting kind of extended and upsized, so we stayed through a weekend. We were doing it in the Cantor office, so myself and Sean Bill, the CIO. And, on the Monday after that weekend, we had 21 meetings, no joke. Starting at 8 a.m., half an hour, all day long, no lunch break, no buyer break. Let's take it in turns to, grab, eat some sandwiches quickly or something, right?
Are these Zoom meetings?
Yeah, all Zoom. It's all done on Zoom now. Yeah. And, interesting conversations with the investors, of course. All of the, the materials that are used in those investor meetings are what is filed with the SEC. That's part of the process. People can look at that on the website and, follow the link to the SEC site. And so we think when it's all told, we're around 1.3 billion raised, plus up to 200 million from the SPAC, depending on the redemptions. And I think that raise is about 2 times the size of the nearest runner-up in terms of capital raised, separately from what came in with the vehicle, right? So we were very pleased with the outcome. It got upsized, 3 times or something during the process. So it was outperformance from what we would have, what we went in targeting those.
Is there anything in the B-Star presentation that you think is kind of overlooked or underappreciated, or that should be kind of highlighted?
Well, I think that we are, there are some differences in what we're doing. So about 2/3 of the capital that came in is Bitcoin capital. So most of the SPACs, with perhaps a couple of exceptions, were coming to Wall Street to raise money with a pipe and converts, buying Bitcoin with the institutional money, and then marketing the result. Put together a business model, put together a management team, and marketing the result, where what we were doing is bringing the Bitcoiners, the Bitcoin, literal Bitcoin early investors, early individual holders in the Bitcoin equity pipe. Though we didn't anticipate it, some fund managers that are US domiciled that had Bitcoin evidently in their fund. With the Bitcoin equity pipe, we also had a in-kind mechanism, so a way to put Bitcoin into it, potentially with early cost basis, without triggering a deemed sale. So it's using an Up-C structure as some kind of tax-deferred mechanism. People would have to talk to a tax advisor. I think that generally is going to be appealing to US investor base, but probably not work internationally as it's country specific. So I think that's a quite interesting formula in itself, because if you do an investment in a normal way, you get, if you get a deemed sale and you've got a tax liability now, and then you have to sell more to come up with the money to cover the tax, and that's a bit recursive, right? So already that will create a tax hit, and then, presumably you're buying something in the hopes of capturing the upside. And then if you later sell that and convert it back into Bitcoin, you'll get a compounding tax hit with the same properties that you had to sell even more to cover the tax hit, and then it's compounded on top of the previous one. So if you do that kind of compounding, sort of double compounding tax structure versus, roll Bitcoin in, retain the cost basis but no immediate, and then later sell, hopefully at a higher price, then it's much more tax efficient. And of course, if it turns out to be the case that the B-Star shares are enough higher that it covers the capital gains here, it could be a way to get a effectively low tax treatment on some early Bitcoin, combined with the treasury company play. So we think that's interesting. And of course, at this point, the other thing that's, I think, different, and we've seen other people start to say similar things, so I think we may be on the forefront of it, is that we're also bringing hedge fund management experience and institutional money management experience in the form of Sean Bill. There's a long career, a couple of decades in hedge funds, debt funds, some experience with Bitcoin dating back to 2015 on a personal basis. Then did a stint more recently at a pension fund, and that was the first US public pension fund where he was the allocator to get Bitcoin onto the balance sheet. And then came across to Blockstream from initially Blockstream, and then B-Star, from another debt hedge fund, which was an award winner for 2 years in a row. So we've got the kind of institutional experience in-house and, different advisors that we think we're well placed to actively manage Bitcoin, which is the punchline, right? So using low risk asset management techniques from a steady pair of hands with decades of experience doing that for, large pools of capital, and, in an environment where you are responsible for, billions and tens of billions of other people's money, in that pension fund, that's public money, right? It was the Santa Clara VTA, which is a large transport worker pension fund, for example.
I'm just thinking of Alexander Lise. He often says something to the effect of he's 121% focused on Bitcoin, Bitcoin per share, everything Bitcoin.
Yeah.
How are you? How would you say splitting your time or allocating your time these days? Is it 100% to the Blockstream and BStar and 21% to the on top of that to the Bitcoin community? Because you've been very, gracious with your time at conferences and appearances. So just curious. I think people might find it interesting just how you think about allocating your time, because obviously you are responsible to certain things.
Yeah, I mean, it's all about Bitcoin, right? Yeah. So, historically, I've been investing in Bitcoin and Bitcoin Treasury companies myself since 2013, and Treasury companies, of course, more recently. And, Blockstream itself is a company with a lot of different sub-projects which have their own technical and project management teams. We have a good C-level management team at the top, so I am not really the project manager or the operations guy, right? I'm more the ideas guy in that company too. And in BStar, Sean Bell is the steady pair of hands with institutional investing. Plus, myself and some of the founders in BSTR and Nuco, which is the company that gets merged into the SPAC on regular approval. We also have a lot of experience in the Bitcoin trading environment going back years. So I think between that, we can do something interesting in the active management space between low risk yield strategies, which I've been running variants of myself for many years, and combine that with Sean Bell's institutional experience to institutional grade, at the institutional grade, handle any risk management on top of that, and then hedged multi-strat alpha strategies, basically. So I think with those we can do some interesting things. And it didn't take long after we said that to see a few other companies say similar things. So evidently the market's heard. I noticed even Microstrategy was saying something active recently. So I think that people are realizing the market wants to hear additional revenue drivers from operating businesses or from asset management.
Got it. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Join us at the Wynn in Las Vegas, February 23rd through the 26th, 2026 for Bitcoin for Corporations. Use code KOTZ when you grab your tickets at strategy.com, and we'll see you there. I'd like to bring in Ed. He's backstage right now. He said he has a few questions. Let's see. And also Soleil is here.
Yep, it squeezed you.
Morning, Ed.
Unfortunately, now you and Adam, let's go Adam when you can
That's okay.
squeeze them there. Yeah. Good morning, Adam. I always joke with you every time I see you because I probably met you about 20 times, but each time I meet you, you got this look on your face like, I meet hundreds and hundreds of people over weekend. I know how that is. So no.
I'm pretty good with faces. So people will say, you probably don't remember me. And I'll say, yep, I saw you at this conference. I remember.
Yeah, exactly. Non-treasury related, but just something I kind of always wanted to ask you. When you first saw the white paper, when it first came, did you get it through the mail list, or did somebody send it to you? Or tell us about that first 10 minutes when you saw the white paper and what it meant for you.
Yeah, so I got it from Satoshi Nakamoto. So I got the first email that Satoshi Nakamoto sent to anybody, at least under that pseudonym or what have you. And I was one of the people that was working on researching electronic cash protocols, going back to Hashcash and DigiCash before it, and B-Money and Bitgold. So I was talking with those guys and trying to brainstorm how to make a decentralized electronic cash, and Hal Finney as well. I was talking with him over the years. So I think, my reaction was that that Satoshi had found a new solution that, everybody else had missed before in making decentralized electronic cash practical with less human involvement. Previous systems required super nodes or groups of humans to set the difficulty and things like that, right? Or the market to do something complicated, specialist markets to even decide what a coin is, right? So effectively, he'd done something interesting. And so, the question to my mind was, will it bootstrap? Will it take off? Because there are lots of kind of internet protocol ideas or, alpha software that are interesting to researchers, but don't necessarily take off in a market sense. So, and then the other reactions were really about the properties of Bitcoin. So the previous electronic cash systems that the cypherpunks at least were trying to find a decentralized way to repair were extremely strong on privacy. And Bitcoin didn't really have that. But, for myself, I kind of, adapted to that pretty quickly to say, well, okay, it's less private, but it's decentralized. And that's, what went wrong with the previous system it wasn't private enough. It was too centralized. So, that counts for more in a way, right? And so I set about later trying to improve the privacy, which is where the confidential transactions feature that's it. A Bitcoin layer 2 called Liquid came from, and that Blockstream later implemented. But that was the reaction, and the academic reaction was far worse. They just basically laughed at Bitcoin and didn't take it seriously until it started to win in the market, and then they belatedly stopped laughing and started, learning how it works in more detail and writing systematization of knowledge papers, and then more useful papers. So
yeah, it's funny. It's I lived in Mexico for 13 years, and people say, well, when did you know you could speak Spanish? And it's just like, I don't know, it was a Tuesday. I don't know. It's just, there's like all of a sudden I think that's the same with Bitcoin. People say, oh, when did you get orange pilled? And I'm like, it was a process, right? I mean, yeah, I bought my first Bitcoin in 2011 on Mt. Gox, but it was just gambling. I don't know what I was doing, right? And then it wasn't until 16 or 15, I get the dates confused, when Michael Tidwell in Atlanta showed me that the code and how it works and stuff. And having been a coder in the past, that's when the light went on for me. So I was just always curious if you had an aha moment, if you kind of leaned back in your chair and went, wow. But it sounds like it was like, okay, there's another step. And then as it built out, it became more like, Okay. That's cool. Yeah.
Well, I mean, like everybody else, I have my regrets, right? I didn't really start mining or buying until 2013, even though I knew about it from 2008, August 2008. And that was really because of kind of waiting for the market to, show evidence of life. And I think that was basically happening in 2013 when the price crossed $1 billion. It's kind of hard to argue with that, right?
Yeah. Cool. And then, well, now my other question has escaped me, but Soleil, I'll let you take it. I just wanted to throw in that one kind of historical tidbit there, but great talking to you again, Adam.
I should have said market cap, not price. There were 10 million coins, then it crossed $100, so now it's $1 billion market cap. Yeah, sorry, go ahead.
Yeah, you want to pop me out, Tim?
Yeah, I think it's kind of crazy that even Adam Back says he wasn't early enough. Like that's kind of crazy. Yeah, thanks Tim for letting me come on, and I'm super excited to talk with you, Adam. And I'll try not to embarrass Tim too much and fanboy too hard, but I think that with Bitcoin Treasury companies now, I think Michael Saylor said that the war for the future of money will be won with money. And now the Bitcoin Treasury companies are on the battlefield. Do you think that they have a responsibility to be aware of the upcoming like code changes and do research and make recommendations to their custodians about what code levels they want to run?
Yeah, I mean, I think because this particular code change is policy. So effectively, it doesn't really make much difference what you run. I think you probably want to focus more on security as a custodian, right? So that generally means the code base with the most review on it, or if you want another code base, the one with the least possible changes, right? So generally, the custodians and exchanges and ETFs have internal experts or technical advisors. And so they are doing more sophisticated things than people expect, like running multiple versions and checking they behave the same, contracting somebody to look at, the Bitcoin development process, there are multiple people looking at each and every line of code change, right? So, they will, in some cases, contract somebody or have somebody who will repeat that exercise, look at every line of code change and see for themselves that there's nothing that that they can see that's wrong with it, as well as, of course, the global review process from all the technical eyes looking at it. The technical eyes looking at it are not just developers. There are lots of not developers are actively working on the project, but there are lots of developers. Like our last guest there was saying that he's a developer, right? So he might look at it, might read the release loads, he might look at something that he thinks is interesting to see what that specific feature does. And so there are lots of eyes on it, and there's, a 2 trillion incentive to don't trust, verify, check the code, right? And the other thing people sometimes miss is that Bitcoin works by an ITF-like technical change process. So that means that anybody with a technical objection, valid technical objection, can put it forward, and assuming that other, technical reviewers agree that it's valid, that it makes sense, that it's actually a risk or a bug or something, that'll pretty much veto and halt any feature until that's resolved. Now, of course, some things are not really fixable, like spam on the internet. Like there's been spam on the internet since the internet existed, so you can't necessarily expect to halt a release if you say, halt the train, there is spam on the blockchain, because there's been spam on the blockchain since probably 2009, right? I mean, Satoshi put a bit of spam in there with the Genesis quote, if you like, right? So I think that was technically in the Coinbase, which is a kind of take space even if you don't use it, so that's probably a little different. But so I think that's like a little bit of a different flavor at the moment. So, and of course the internet is a permissionless place, right? So if you and I want to run a different piece of software, we can do that. And we should be happy that we can do it because we get to express our individual preference, right? And there's nothing we can do about it if we don't like the other piece of software. So I think most people have a kind of laissez-faire attitude, right? Live and let live. If somebody wants to run some software, even if they don't agree that that's the right software to run, they will fight for your right to do so, right? Like free speech. I think the only area where it gets a little funky is where it comes to defaults, So do you carry a bit of weight? And there is, a reference client and it has default. So effectively, people are not content to live and let live. They want to fight to make their preference the default, to try and push their preference on other people. And that's, I don't know. I'm not sure what you could do about that other than maybe, make a client that has a splash screen when you start it and forces you to make a choice, right? But generally,
like a character selection screen.
Yeah, right. Do you want to prioritize for fighting spam, or do you want to prioritize for decentralization, security, robustness? So, faced with a choice, I would go for the second one. But some people want to try the anti-spam, and I think pretty much everybody dislikes the spam. So, really, the BAL is not about the mission or any disagreement about spam being a waste of resources and not really helpful for the Bitcoin mission. Like with the forks in 2017, the forks that got spin off in 2015 to 2017, Bitcoin Cash and all the rest. Some people thought, oh great, free money. They sold them and bought more.
Yeah.
But actually I would say every dollar that was received was not free. It was paid for with, brand damage to Bitcoin from confusion from all these forks, and the drain on resources from the distraction factor of all of the arguing about it. So, in the spam case, there's no, it's different, right? There's no fork. It's just what you run on your own node. So people can completely coexist with different code, and most of the impact of running anti-spam code, which does slow your node down and create extra overheads, it's mostly felt by yourself, right? So if you want to buy a faster computer or something and run it, that's up to you. So I think it's a pretty permissionless environment. Yeah, and I think the other thing that's kind of overlooked is, or not, I should say that, these things are very complicated mixture of economic game theory, like markets, like the spam market is like other markets is complicated to think about. Everything that you might change has second or third order effects. So you might say, if we do X, the spammers will do Y, and you might be upside down. They might actually make it worse because you didn't foresee what their reaction would be, or you guessed wrong or something like that, right? So you got the economic effects, you got technical effects in terms of how it affects network efficiency, and then you've got social effects where people are angry about spam, and that I think is most of the people are angry about spam, so there's not even any disagreement about it, other than the spam industry,
Right?
Of course.
Yeah.
So really, what you're down to is a kind of tussle between people on the same mission who are annoyed about the same thing, about what tactic to use to best combat the spam. And as is actually common, people who really care about an issue, about a mission, have a fiercer argument with their compatriots about how to address the shared issue than they do with enemies about who don't even care about Bitcoin, right? So it's just a kind of factor that, and I think also people shouldn't really worry about it in the sense that, it's unlike other things with, PR firms and marketing departments and CEOs, like many of the altcoins, they can present a smooth sailing picture because they're having their fights behind a closed door. With Bitcoin, there's nobody in charge. So all of the trade-off discussions are happening in public. So, what looks like an intellectual brawl is just the side effects of decentralization, basically. So it effectively makes Bitcoin stronger because the battle of ideas, right? And some of the things may not even necessarily have a right answer because you can't necessarily predict risks or the market or the network behavior entirely.
Yeah, there's one good outcome maybe of this is tons of new people are running nodes. Like I was, stacking sats for quite a long time and just recently decided to run a node. But you mentioned the code, and it occurred to me, like, people like to say we're all Satoshi, and I thought, AI is getting so good at coding. Do you ever see a future where like we're all developers? Like literally every person on the planet can just go to AI and say, hey, I think I can figure out how to fix a certain bug. And like, we'll have 8 billion developers, making sure that Bitcoin stays secure.
I mean, there is some things you can do with AI, but I think they tend to be a bit on the simpler end of things where it's not very important if it goes wrong, like, making a website with, some JavaScript on it or something, but, the vibe coding thing. But there is use from using computing assistance to security. So, for example, so people think of the Bitcoin project as a monolithic thing, but actually it's dozens of not-for-profits and a few companies and volunteers all around the world. They're sitting in different offices or working remote. And then the release process that becomes a Bitcoin release is actually, just assembled from the recent activity of those different projects into a release. But there is, those projects are working on different things. So like localhost in the Silicon Valley is focused on the Bitcoin QT or Bitcoin command line embedded wallet. So they're working on improving the wallet, and that's what they focus on, right? And Brink, which is actually based in London physically in the UK, is focused on security fuzz testing. So fuzz testing is basically some specialized knowledge. They've hired a number of PhDs as interns and are looking to get financing to step that game up. With expert human knowledge, steering computers to exhaustively test the software for edge cases. And you can throw enormous amounts of compute time at that if it's steered correctly, because you can't brute force it because it's too big. But a fuzz testing with human intelligence can sort of target it on the risk areas somehow. And that, does occasionally find edge cases and things that need fixing. So I think more of that kind of security testing is good. So, there are places where computing resources can help multi, and also the libsecp library, which is the kind of cryptographic library that does signatures in Bitcoin. Blockstream has, a strong research team there that does a lot of the work on that. And one of the things we did was to mathematically prove the correctness of, critical pieces of code, which is a different kind of computing activity, right? To have a computer formal proof system help you prove it's correct, prove the code is correct, basically.
Yeah, I think that's pretty cool. So as far as like the battle testing and unintended consequences, do you think that the taproot upgrade was, some people will call it a bug and say that that's kind of what amplified the ability for spam to occur? But I mean, I'm not technical, so I have to ask this question. Like, can something like that just be patched or backed out even? I kind of feel like an imposter in the IT space because I did work in IT, and when we would go live with a project, we always had like a go no go plan and a back out plan. So can those things just be backed out or patched?
Well, I mean, I think firstly, it's not really a bug because what it's saying is, and as some WAG like submitted a common vulnerability, the CVE report on the NIST site, so people are taking it seriously. But you could go on the NIST site and make a bug report on anything, and then it becomes the vendor's job to delete it. So they're not really screening the report; they just leave it there until the vendor goes through the process of getting it deleted. So I think people will get that deleted. It doesn't make sense. The claim is that somebody can hide data in code, and pardon the French, but no shit, you can hide data in any programming language ever invented, right? So that's not a bug, definitionally. And now, of course, you don't want people hiding data in code because it's very hard to combat because there are an infinite variety of ways you can hide data in code. So if you write a filter to block one, they can change it, and if you block that one, they can make it much harder. They can make a polymorphic code that changes every time they send something in it, and then now you have to start applying AI, and you can't apply AI if it has false positives. So it gets real ugly real fast. So I think your best bet is to somehow find a way to incentivize people hiding data in a blockchain to stop that and put it in an op return like structure, because that you can filter based on size. Filtering based on code is like a very risky area. And then in terms of potential to back out, I think a lot of people would assume that to disable a new signature format requires a hard fork, but it actually doesn't. You can do that with a soft fork, but you've got to be pretty careful about that because people have got a lot of money parked on it, and you can't freeze their money. I mean, that's a pretty central piece of Bitcoin, to not censor, freeze people's money by side effects. And so, yeah, I think, you might be able to, but as I say, I don't really think it's a bug. And I mean, one thought exercise to explain why it's not a bug as well is that same mechanism of hiding data in code would have worked with SegWit, taproot came in 2021, SegWit, I think it was 2017, and you could hide code in that too, hide data in the SegWit code, you could hide data in the previous code, you could hide in op returns back to 2014, you could hide data in fake pub keys back to 2009. So it's more of the spam exists on the internet as long as the internet's been around, and that applies to all protocols, including Bitcoin. So, of course, it's nice to sort of find a way to create an incentive for people to, BitMEX research, Johnny Beer posted some thread yesterday or the day before of a 2010 Bitcoin Talk Forum discussion, which sounds exactly the same as today's, right? It's like, the spammers could do this, the spammers could put illegal content in here. What about this? What about that? And the upshot is that they introduced the policy. Before that, there was no policy, only consensus rules. And, the 2014 discussion about adding hot return was trying to give the spammers somewhere less problematic that could be pruned from the memory cache to put the data, simply because they'd spent, the previous 4 years trying to discourage people, and it didn't seem to work, right? So, when you end up fighting the free market, you tend to lose. That's the problem, right? So, there might be ways to improve on that, but it's not easy.
Yeah, I'm struggling with the free market aspect because I'm all of my, I guess, opinions on this are libertarian, property rights, freedom of association, and kind of game theory kind of aspects. Mm-hmm. But Bitcoin solves the Byzantine generals problem, but I'm struggling to figure out how spam and I guess spammers fit into that, because it seems like they're a parasitic actor. They're outside of the network and they're attacking it. So there's really no, the Byzantine general problem doesn't really work on them because they're outside of the network and attacking it. And we have to defend ourselves from it in a way that the free market doesn't seem to have a solution for.
Yeah, I mean, I think, there, of course, so what we're talking about as a baseline is that, spammers on the internet, we don't seem to have ever managed to solve it, but we don't give up, we try, right? So that's people's intuition. Well, it's hard, but we should try, right? But there's an additional problem with Bitcoin, which is the Bitcoin network architecture is designed to be censorship resistant. So it's much harder to control spam in Bitcoin because the network can't really distinguish spam from transactions. It's neutral and it doesn't understand. It's a computer, right? So that means that it appears to me, after noodling on it for a little while, that there's some kind of inherent conflict where we want Bitcoin to be censorship resistant, but to the extent that even if we could succeed at controlling spam, we would, I think, almost inevitably have weakened Bitcoin censorship resistance, which is, one of its most key properties, shortly behind, 21 million supply cap, right? So we've got to be careful what we wish for because, you can see actually a prior precedent of this very situation, which is email spam. Go back a few decades, a lot of people ran their own SMTP email servers, and I used to run one. And then the spammers would create a lot of problems. And so there were new features and protocols introduced to control spam, and it made it harder and harder to run a mail server because, it became a lot of technical work to keep your mail server running so that you wouldn't get cut off from the network by other nodes or bigger mail servers that demanded you keep up with, ever-evolving set of anti-spam tools. And so ultimately what happened is we lost. Like the spammers, I don't know if the spammers won, but the people that cared about the self-sovereignty of running their own mail server and not have, people, so it ended up in the control of Google and Hotmail and all those kind of things. And it turned out from Snowden's disclosures that they just shared it all with the NSA. So we all lost, right? And effectively, if you're running your own mail server and it has SSL, you receive a message, nobody sees it apart from you and the sender. And if you delete it, it's gone. That's all lost if it's in the cloud. And so, that's a story that we can draw from, that if we get too far down the road of prioritizing combating spam above decentralization, that we can end up with, not with the nodes and the filtering and the transaction submission going via big pools, big wallet backends, and, before you know it, Bitcoin won't be censorship resistant. So it can still be digital gold, but it'll feel more like PayPal, which is, your stuff can get frozen randomly, and that's not what we want, right? So we have to be pretty careful about how we combat spam, or how we try to combat spam. I mean, it's hard to actually impact it, right?
Yeah, I mean, I think some people even say it's hard to define it, but I
think a JPEG is spam, personally.
Yeah, I think that's pretty obvious. Like, if you think about the attributes of money, right? We got immutability, fixed supply, divisibility, all those things. And morality is not an attribute of money. So when you introduce a moral hazard, like, okay, here's a picture, and anyone can decide this is a good picture or a bad picture. So I think it's just kind of obvious that anything that introduces moral hazard is not a financial transaction. I mean, can we just make it possible for, even like nodes that are not run in prune mode, like just all nodes, can they be prunable, or is that screw up our censorship resistant theory?
That's one of the topics of discussion, whether there could be a new feature to allow nodes to delete, op return type data, like some kind of new field, so that it's sort of opt in or opt out, keeping it. It's a little tricky because you don't want to create a risk, like a soft fork risk. I think because you're running nodes, that if one of the reasons to run a node is that if there's a contentious fork, like happened in 2017, you're actually part of the solution to don't trust, verify, and stop that by running a node. That's kind of the the culture of being a node runner, right? That you're the guardian on the wall to stop that happening and sound the trumpet and like call the rallying troops if it happens. And so if you are running SPV, something like you didn't upgrade your node, you might not notice some things, or you might accept something that's not valid under the new rules after a soft fork. Let's say it's Schnorr signature you haven't upgraded, so you're not aware of them. You could accept a signature that's invalid if some miners mined it and your node wouldn't notice. So in deleting data, you want to make sure that something like that won't happen, and it's complicated. So I think it's, I don't think anybody disagrees that it would be nice to not store that stuff, not have to relay it, and the challenge is that when you find a block and you relay it to a full node, the full node won't consider it valid unless it receives all the data, verifies it. And so if you shortcut things, then you could accept something as valid, but it's actually not once you see the data doesn't match what's hashed or something. So that maybe it's solvable. Let's hope so. I mean, you can participate in Bitcoin. It's sort of a little bit like, Bitcoin used to have much higher risk perception, like other sort of self-sovereignty peer-to-peer networks like Tor and Remailers, where you had to be careful running those. Somebody did something through your node, you could receive legal complaints, and there were people that had to get the EFF to try and build a legal defense for. And so what would happen in peer-to-peer networks and file sharing as well is some people would say, well, I want the file sharing, but I don't want that risk. Some countries were pretty aggressive on trying to selectively prosecute just file sharing, music files and what have you. And some people would just leech, right? They'd run the node, receive the data, stream the stuff, but they wouldn't reshare it. They'd just be on leech mode. So you can do that with Bitcoin too, right? So it's another solution for people that are, a bit concerned about legal risk.
Yeah, well, Tim, I could talk to Adam all day, but I don't want to monopolize the whole show. I do want to ask you about maybe Blockstream Jade is a Bitcoin only solution, and I've made sure that I try to be Bitcoin only in every area of my life. So I won't own a cold storage device that's not Bitcoin only. I won't own a Bitcoin treasury, a treasury company that's not Bitcoin only. I don't buy them on exchanges that aren't Bitcoin only. And, do you think there's any hope at all for some of these treasury companies that are trying to build on altcoins, or are they just doomed?
I mean, I think that they are bidding on the wrong horse. I think as we covered just a bit earlier in the conversation with Tim, that the Bitcoin market share or Bitcoin dominance has grown because the more professional and institutional investors are value investors, long-term investors, and that story doesn't work for the altcoins because there's, I don't know, depending on how you count, I'd probably get in behind the times, but there was 30,000 coins and millions of meme coins. Maybe it's more by now. And that's fine for people that want to play in a casino and day trade them with leverage, but that's not what long-term investors do. So it seems like a pretty odd choice for a treasury company. But the regulators approve all kinds of high-risk things, right? You can buy double and triple leveraged stocks and indexes in ETF format, right? So it's not really a hard investability judgment for it to get approved. So people have to form their own opinion ultimately, but I certainly wouldn't buy them.
Yeah. Well, this was great for me. Tim, I'll turn it over back to you, but I think this is pretty cool. Like Adam, you're 1 degree of separation from Satoshi, and so that makes me 2 degrees of separation from Satoshi, and it's not going to get any. That's basically as close as I'll ever get to come. So this was wonderful talk. Appreciate your time.
Have you heard about the Bacon score?
Yeah.
Yeah, there's like connections to Bacon, and there's an academic one called the Erdos score. So Paul Erdos was a famous mathematician, and he's not alive anymore, but people will try and work out, are they co-author a paper with somebody who co-authored a paper with Erdos, and then they have number 2. I work out, so it's a kind of Kevin Bacon score for papers. So I guess, you could make one for Bitcoin, right? There you go. The Nakamoto score. Yeah, you developed a new idea there.
6 degrees of Nakamoto. I love it.
Mm-hmm.
Awesome. Thank you, Soleil. Great to see you. Thanks for co-hosting and asking questions. And we will see you on the Orange Pill Investor Podcast, which is your podcast, correct?
Yes, sir. I'll see you there, and I'll see you on True North.
And on True North. Awesome. Thanks, Soleil.
Thanks, Tim. Thanks, Adam.
Thanks.
All right, Adam, any closing thoughts before we wrap it up?
Well, I think we opened with the it's over and we're back. Oscillation of sentiment. So
we're over 121,000 as we're on the live stream.
All right, I haven't been looking, so well done. Yeah. Right. So apparently we're back.
We're so back.
Maybe we'll get a new all-time high before the week's out or something. Yeah. So good signs.
Awesome. Well, thank you so much. This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin treasuries perform against the market. Upgrade to premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin Treasury phenomenon.